Okay, good morning, class. Today we are going to look at the users of accounting information, objectives of a financial statement, and financial statement and the reporting entity. We are still under chapter 2 of this financial accounting, and this is the second video of chapter 2. Okay. Now, we are going to look at the users of the accounting information. The users of accounting information, uh, we have internal and internal users and external users. These are the two types of the users of accounting information. The internal users are those individuals who run, manage, and operate the daily activities of the business. They are internal users. Then, who are the internal users? We are now going to look at the internal user. First, we have the owners, that is shareholders. Then we have directors. We have managers. We have officers. And we have different departments in the organization. We have employees. We have internal auditors. So these are the internal users of financial information. Then the external users. The external users are those individuals who take interest in the accounting information of an organization, but they are not part of the organization's administrative process. They just pick interest in the activities of the organization. Here we have creditors, we have potential investors, we have governments, we have trading partners. This could also be competitors. We have journalists. We have financial analysts. So these are some of the financial users of the financial information, and as I earlier mentioned, they are divided into two: have internal and external. So, and now we are now going to look at the objectives of the financial statement. Objectives of the financial statement. The objectives of the financial statement. The objectives of general purpose financial statement forms the foundation of the conceptual framework, and other aspects of the conceptual framework flow logically from the objectives. And one of the objectives is to help users of that information to make informed decision. Let's see. To make informed decision. Then number two, it's also help in assessing the future prospects of the net cash flow. That is a future cash flow. This also assists in assessing the net future cash flow of an entity, and it also helps in knowing the financial performance of an entity, and also identify the financial strengths and weakness of the reporting entity. Let's say strengths and weakness of the reporting entity. That is it. Then we can now look at the financial statement and reporting entity. Financial statements and the reporting entity. Financial statement and the reporting entity. The objective of financial statement is to provide financial information about the reporting entity's assets, liabilities, equity, income, and expenses that is useful to users of the financial statement in assessing the prospects for future net cash flow to the reporting entity, and in assessing the management stewardship of the entity's economic resources. That is it. And what this means is the statement of financial position by recognizing assets, liabilities, equity. As I said, first, it now helps the financial statement, helps the reporting entity knowing the assets, liabilities, income, expenses, and equity of an entity. And to know this, you have to prepare your financial statement, and that reporting entity will use all the financial statement to know all this. Then we are now let's look at the reporting period. Reporting period. The financial statement are prepared for a specific period of time and provide information about the asset and liabilities, income and expenses for the reporting period. Reporting period is you cannot just prepare your financial statement anytime, anyhow. You can only prepare management report anytime that you want to assess the maybe cost and income of that period, but or any time. But financial reporting, that is financial statements, are required by law to be prepared at least every annually, and you can also prepare it quarterly, that is after every 3 months. So, and this reporting period is where your financial statement must be specific, must have, okay, this my report is as at let's say 31st December 2022. So you must have your reporting period. It can be 31st December, could be March, April. It depends the date you pick. That is the reporting period. Then we have going consign. This going consign is all the financial statements are prepared on the assumption that the reporting entity is a going concern, will continue in operation for the foreseeable future. It is assumed that the entity does not intend or need to enter liquidation or to cease trading. If that is not the case, the financial statement may have to be prepared on a different basis, and basis use must be described. The going concern is all about the financial statement is a going concern, and the business will not liquidate, will not stop, will not cease, and that is going concern. And on the other hand, if reverse is the case, then you have to now prepare your financial statement using breakup basis. That is going concern. Thank you so much.